The housing market right now is crazy, guys.
Something crazy is happening.
We are seeing some ridiculous things happen in the market right now. And when it comes to affordability, we are at an all-time high. We haven't seen this unaffordability since 2006, guys. And we know what happened in 2006, right? The crash, the financial crash, the Great Recession happened in 2006, 2007, 2008. We know what happened during this time. If we're in that same situation, we have to know this is a red flag of what's to come. And with this crazy housing market, we have to make sure that we're in the best position possible so that we can get the best interest rates and everything. And we know identity theft is a really big issue. That's why I'm excited to partner with Aura, who is sponsoring this video. I've been using Aura, and what I love about it is the fact that not only does it protect me against identity theft and also monitor my credit and things like that, but I love the fact that it opts you out of these data brokers that could knock down your junk mail, all those ridiculous spam calls that you get. And also too, it has been taking information off the dark web. You know, your logins and your passwords. So look at this. Look at all of these hits that I got of my information being on the dark web. It goes ahead to let me know that I need to update and change my password. So you're going to get a 2-week free trial if you use my promo code, which is aura.com/Orlando. You can't beat that, guys. 2 weeks free to see if your information is on the dark web. Also, when you sign up with this free link, please comment in the section below to let me know how many times Aura found your personal information on the dark web. So let's jump right into it. The last time houses were this unaffordable was 2006. Surging interest rates and home price appreciation made in March one of the most challenging months for home buyers looking to make purchases, according to a recent report. Annual home prices gains saw 19.9% annual appreciation in March, down from an upward revised 20.1% in February, which was the first month to see price growth greater than 20%, according to a report. While the annual home price growth reflects a slowdown in March after accelerating for the previous 4 months, home prices are up about 6% nationwide year to date, a 30-year mortgage interest rate of 5.11% as of April 21st. Okay, so as you see here, it says 30-year mortgage rates. It came down from that 7% that we saw earlier. You see here this on the chart. So right now, mortgage rates are 5.972% for a 30-year fixed. Now you see when I did my first report about them being at 7%, you see right here, it was almost at 7%, went down, went back up. Now it's going down. It's at basically at 6%. So we see rates have went down. Rates have went down. But we all know, that rates will not stay here, right? We all know this. We know a rate hike is coming in May from the Fed, so get ready for it. So let's see what else this article says. And I just wanted to check that because some of these places, the rates that I'm looking at right here is the average nationwide, not just in a local area or something like that, nationwide. So rates nationwide, average is 5.972. You can look that up yourself if you just go on Google and type in mortgage rates 30-year and it comes up. It says, as a measure shared by median incomes required to make a principal and interest payment on an average priced home bought with 20% down, U.S. housing was the least affordable ever back in July 2006 when it took 34.1% to make that principal and interest payment. A guy from Black Knight says, as of April 21st, that payment to income ratio has climbed to 32.5% within just 1.6% points of the prior record, guys. So basically what this is saying is when underwriter looks at your debt to income ratio, that determines what you can actually afford. What's the size of home that you can afford? How much money can a bank lend you before you reach a certain debt to income ratio? This debt to income ratio that they're saying was 34.1%, was the quote unquote least affordable, right? And then it says here that we've climbed up to 32.5%, which is very, 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 very close to where we were in 2006, guys. Now, what is the purpose of me explaining this? Well, the point is that we're seeing these red flags pop up. People believe that we may not probably maybe won't have a recession or any type of housing crash. And I keep showing individuals these red flags that say, look where we're going. Look what has happened in the past. And if you guys look at what happened in the past, based on these numbers, we are almost right there at 2006 unaffordability levels. And what does that mean? That means that get ready for a crash. Get ready for a recession. For me, guys, the biggest thing is that if we have a housing crash that is caused directly from a housing crash or a recession that causes a housing crash, it's still a housing crash. It's still a housing crash no matter what. We're seeing people pay property taxes with loans, right? We're seeing people can't afford property taxes that didn't even buy a home because their property taxes have risen with everyone else around them. Property values increased, and since those individuals overpaid, we're starting to see that. We're starting to see interest rates go up to a ridiculous high level, and we've only had one increase. So what happens if we have 2, 3, 4, 5 increases this year, are up all the way up until February? What's going to happen to interest rates then? We're already went up to 7, came back down to 6. The Fed is going to raise rates double of what they did previously. Adjustable rate mortgages, which typically have lower interest rates than fixed rate mortgages, have become an attractive option for borrowers in challenging housing markets. The spread between 30-year and ARM is the widest it's ever been since 2014 and within 20 basis points of the all-time high. Let me tell you what, guys, do not, listen to me, do not take an ARM. Do not go for it. A lot of times people use ARMs as a tool, right? And the general public normally does not know how to use that tool. I get it. ARMs are used for, people who know how to use those, investors, things of that nature. But for the most part, the general public, I mean, individuals who are just buying a home and living in it, you should have no reason to get an ARM. It makes no sense whatsoever. And just because you currently see interest rates going up and up and up, it's better to know exactly what you have than just magically the interest rate changing on you and you having no idea what the rate is going to be. And then it changes again on you again and again and again. And then if we have a downturn from a recession, then you can't refinance to anything else. You just trapped in this ARM until the value of your home comes back up so that you can refinance. Don't do it, guys. So let's talk about this. So right now, all of the red flags that we have 2006 unaffordability. We have crazy property taxes. We have inflation at 8.5%. We have gas prices the highest that they've ever been. We have food at the grocery store, the highest it's ever been, right? We have interest rates going up through the roof. How many more red flags do we need? And I'm pretty sure I'm missing something. Rents, all types of stuff, labor shortages, appliances, the shipping supply shortage and all that. Like, it goes on and on and on, guys. If you do not see all of these red flags and you think that magically all of this is going to go away and there's nothing that's going to happen in the economy when these things do go away, you just think that all of a suddenly, we're just going to be up to, like we were last year, 32% year over year, and it's going to continue this year, and nothing's going to happen, Orlando. Orlando, stop it. Nothing is going to happen. We're just going to continue making money like we have year over year. I think you're going to be disappointed. I think you're going to be really, really disappointed. When you see that we cannot continue to do this year over year, something has to give, and the housing market will be one of them. Once again, guys, this is not a doom and gloom video. Not a doom and gloom video. This is a video to help you get all the data and research that you need to make a decision that is best for you and your family. And I'm gonna need you to watch this next video here. It will help you learn about this crazy housing market, get into your first rental property. Also, check in the description for memberships and all useful links, guys. I will see you in the next one. Thanks.